Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
This is Nick Pietrozzello. It's Wednesday, July the 1st, and it is, what the hell time is it? Like 8:30, 8:23 EST, and we're doing the B.A.M. Brotherhood of Ancestral Masculinity, the trading markets and crypto show that we do it every other Wednesday, and some of the guys in the community come on and they ask questions about trading. They might have questions about geoeconomics. They might have questions about anything to do with markets, trading, stocks, crypto, whatever it is, and I answer those questions, or I do my best to answer them, or I don't give answers that will get me sued, right? Because we don't do investment advice. So, and we have actually an individual with us, and you are actually one of our Algo Factory clients. So we're able to speak to a little bit higher of a level when it comes to like trading and algos and stuff like that. And for those who might be new to watching this, I have a company along with my business partner, Vita Gorilla. It's called Algo Factory. We teach people how to build trading algos. And there's a lot of people out there who they want to do this agentic AI trading. They want to go and have a Claude make them a trading bot, and they push a button and become a millionaire. And as great as that sounds, it's not how it works. You actually have to know what you're doing. You have to know how to build an algorithm, because the algorithm is an engine. That's the engine to your agentic AI trading bot. Without the algo, your bot doesn't do anything. So if you want to do automatic trading, if you want your computer to trade for you while you're golfing or sleeping or whatever with your girlfriend or whatever it is, then talk to us. Link in the description, free algo, check it out. And it's a pretty cool video. It shows you the basics and how we do that stuff. It even gives you a free algo. You have to optimize before you use it. So don't just go plug it in and trade it. You'll learn how to optimize it. Come to algofactory.tech, right? There's a sales pitch. So, Larry, what kind of questions do you have? Anything in particular?
Two. So I'll start one that I have for macro market. I have a pretty good algorithm that's working out pretty well. I'm using a MACD with a stochastic, and then I'm using a ADX volatility with it. Okay. I also back it up with sentiment, just vaguely with a Williams percentage, which we've talked about before.
We have, yeah. I used to use it. Do you want to send me a link to your algo so we can put it up on the screen and analyze it?
Yeah. Let me see if I can do it.
While you're doing that, let me explain to any viewers here. So this, because Larry here is versed in such things, this is probably going to be a pretty technical session. We're going to take a look at Larry's algorithm. What you see on the screen right here is kind of pieces of mine, right? You have an MACD here, which is an indicator. What these indicators are is they give you clues as to where price is going to go, right? And I use different indicators with different math. This one's called a stochastic momentum index, and there's a volatility related one on the bottom there. And so when you match all that data up, you get algo, right? So one thing I can do and have done is I take all that data and I create just one signal. So you don't have to look at all that stuff. And it just tells me when all that stuff lines up. And that's what you see with this green arrow, that green arrow, this green arrow. And you're like, oh, okay, cowboy, Nick, why don't you just like have the computer go long when those arrows hit? And well, quite frankly, that works. Doesn't work all the time though, but it works most of the time, right? Like for example, here's one that does not pay off right here. This little short, right? That did not pay off, but that long's a winner. That long's a winner. That short's a winner. That short's a loser. You know, if you're winning 6, 7 out of 10 and your risk to reward is appropriate, you will be profitable. So it's definitely what we're here to do. Did you get your algo linked up there, Larry?
Where do I go into it? I'm on my phone. I'm trying to figure out where.
Oh, then I'm gonna have to look on my phone.
I got layout set up.
I can tell you how to do it on a desktop.
Yeah, I remember how to do it on a desktop.
I can figure it out. If it's possible, I will figure it out. Let's go to chart. Okay, so let's go to here, layout setup, manage open indicators, chart type. Let's go to, okay, here's how you do it. On your phone, right? You click go to the bottom of the chart, click the 3 dots. When the 3 dots comes up, it says analysis hub. Do you see it?
Yeah, that's where I'm at right now.
You see where it says manage whatever the name of your layout is. Manage, I don't know what you named your layout. What's your layout called?
Yeah, I got it.
Okay, click on that and you enable sharing. Do you see it? There's a toggle where you can turn sharing on.
Yeah, it's on.
Okay, so copy that link and then send that over to me, wherever you want. It could be the chat or Telegram. So let me know where you send it.
I'm sending it message. It's going to be a text message.
Straight to what?
Text message. Does that work?
Okay, yeah, that'll do. Yep.
Okay.
I got it. Yeah, I got everything, dialed in.
Perfect.
Okay, so now what I'm going to do is I'm going to open up a new window. I have to save a copy of this because I won't be able to manipulate it. Copy Larry, and we'll call it Larry 7-1 for July 1st. Okay, so is it a single time frame algo?
Yeah.
Okay, we got an MACD. We have your, what is this, the Williams?
No, that's the
stochastic RSI. And then the bottom here is going to be your volatility.
Yeah, that's the Williams.
The Williams percent. Okay. Does Williams work? Is it a similar oscillator to stochastic RSI? Is it overbought, oversold, same kind of thing?
Correct. Yeah.
Okay. And I'm noticing that Williams will be overbought when the stochastic RSI is not overbought.
Correct. But what
Like it's more pure of a signal, probably weaker, but it'll hit signals that stochastic doesn't. Is that correct?
Yeah, and the curvature of the line lets me know in the moment, because that one will rebuffer very quickly. So as the candles close, then that will smooth that line out quite a bit.
Gotcha.
But in the moment, if I'm looking at a trade, that I can tell how fast the percentage is moving if I'm watching it to a certain point of interest.
What's the formula?
Structure based, so areas of interest
Gotcha.
based off of gaps, lows, intraday, multi-time frame analysis. So where the monthly highs and lows were, the weekly, daily, 4 hour, 1 hour, and
let's do that. Let's start mapping this out. So we're on a 2-minute chart right now. Yeah.
Correct. That's what I use for my end.
Okay. So I'm now on the monthly chart. So I'm going to map out the monthly high, monthly low. Do you do current month high and low or the prior month high and low?
Prior month high. I do prior month, but I do pay attention to where it is current.
Yeah. Well, that's going to be on your daily.
Yeah.
So here's your month high or low, and I'm going to label this month low, monthly low, and we'll label this monthly high. Okay. I'm going to go to, you do weekly?
Yes, weekly.
Okay. Well, weekly high is going to be the same as monthly high. Weekly low for the prior week is right here. And the monthly high, we'll do monthly/weekly. Okay. Now we are going to take a look at daily highs and lows, and your weekly, okay, it's prior day. So we'll do that, and we'll do this daily low. Okay. So we've got that mapped out. Do you care about the 4 hour high and low?
4 hour.
Okay. Is that the most specific high and low, like, that you look at? Is that the lowest time frame?
Correct. Yeah.
Okay. So here's your prior 4 hour high and low. Okay. Or high. Make this simpler. 4 low. Okay. All right. So we have our highs and lows, right? So you care about structure. We've established where that is. And what else are we looking at for this?
So now I go to the 1 hour to establish my bias based on trend.
So we're going to look at the 1 hour. And what do you use for trend? Do you just use MACD or?
Yes, the MACD below signal with the bear. And
you're doing MACD below signal, and that's it.
Correct.
That's good. So we're in a bearish trend. Okay, we'll just type that out.
Yeah. So my trend is bearish right now.
Yeah, bear trend. Okay, and we'll just come on now. There we go. It's a little slow. All right, and I'm gonna make this a little bit smaller. Good. So we got our bear trend. Good. Now what do we do?
Now I start looking for entries. I'll look at the 15-minute to see if there's any gap.
So go down to 15. I'll have to add that in. I'm gonna use the 15. So 15-minute. And do those gaps? They're all outside structure. Outside structure or inside structure gaps, right? So it's got to be within the highs and lows.
Correct. Yeah.
Okay. So I don't see any gaps.
So there would not be any there. Correct.
Okay. So we know there's no gaps. What else do you look for?
Now where we're at right now. Well, no, it's in the gap right now.
On a 15-minute?
Yeah. Where you've come up, that middle candle right there.
This one right here?
Yeah. That one's touching the gap right now.
Oh, is that what this blue is?
No, that's some shading that TradingView has on it already.
Which gap are you talking about?
That second candle on that move down.
Yeah.
Isn't there a gap in there? Oh, I couldn't see the wick. Never mind.
Yeah, there's no gap.
I couldn't see the wick on the previous candle.
Okay, cool.
I didn't realize that one had already touched that zone.
Yeah, even so, there's no gap because it opened after the close of the prior candle. So there's no gap in either way. So there's no gaps on the 15. So what do you do next? You know you're in a bear trend. You respect structure. Do you move down to the 2-minute?
Okay, I'm at 15.
Yep.
Where are the indicators? Are my indicators? Is the MACD rolling over?
MACD's rolling bull.
Okay, so MACD's rolling bull. My stochastic RSI is starting to roll as well. So it's bullish.
You got a nasty stochastic, man. It's real choppy. What are you using, 8s and 3s?
I don't know why it's you know what?
You're on 8s and 3s.
That defaulted back when I sent you the copy. That's not what I run on.
Okay, do you run on just typical defaults? 3s and 14s?
Yeah, we set our 3 and 14 is my default set.
Okay, you're back to that now.
Yeah, because we adjusted that a couple weeks ago.
So you have MACD flipping bullish. You have stochastic flipping bullish. Your Williams is below the 50%.
Okay, so I will wait till I'm bearish on the MACD above the signal line.
Oh, so you actually have to have this come back all the way above.
I've been doing that. I'm starting to back test making that entry a little bit sooner from that standpoint, but it's been working if I wait till it's above signal line.
It's going to be a better entry like that. But the problem is that it needs to continue to be in a much higher time frame bearish trend in order to do that. Otherwise, you risk it flipping the trend because now you are in a bullish momentum move. But if the trend is strong enough bearish, that's a great time to take an entry because then the bull's backs are broken, right? So if it popped above and it popped back down. This is a common thing I imagine with traders, because I know it's common with me, is that I see these opportunities with the MACD being like that, where below and it just keeps getting crushed, and you want to get in, but then that one trade that doesn't go well just kills you, and it's sort of unpredictable. So what I would tell you on this is you're doing 2-minute entries, right? So let's just say that the conditions, like for example, the conditions were met right here. No, they were not. It's hard. I'd have to kind of redo everything, go back to see what the trend was, but yeah, I'd have to go back and look at the hourly.
I wouldn't be looking for a long on that one because I'm trying to not trade against the trend.
So the trend has been, here's what we'll do. We know that after this dotted line, we'll change it a little bit here. We'll leave it as it is. After that dotted line, it's all shorts, right? Because you have an hourly MACD bearish trend. So we know it's all bearish after that dotted line, right?
Correct.
So if we go down to the 15, then we know, just to do a little back testing, if we go down to the 15, then we're going to know that to the right of this line, it's all like, the problem is that the MACD after that line is all underneath, right? So what's going on here is that in a strong enough trend, you're missing trades. In this case, it might be that it doesn't act like that in other scenarios. I'd have to sit here and test it, do everything. So this is what I've found when it comes to this scenario where the MACD is below, but you keep getting good signals, right? What I would do is I would not take a trade on this until your stochastic overbuys and then flips. Okay.
You're talking about taking a short.
Taking a short. It's a bearish trend.
Yeah,
you can only take shorts. So what I would do with this is that I would let the 15-minute stochastic go all the way to overbought. And then after that happens, that's when you can, when you have a bearish RSI on the 15, that's when you can consider taking 2-minute entries. Because after that, it's not going to work out so well. So let me do this real quick. Change this style to yellow. All right. So you have here, roughly here. All right. We're being pretty kind of, slipshod with this a little bit, but between the white and yellow are the only times you could take shorts in this case. So if I were to go to the 2-minute chart, then what's your entry on the 2-minute chart for entries? What are your rules?
I want to make sure that I am paying attention to structure and I'm not entering a short directly into resistance.
So what do you use the 2-minute for? Do you have rules on the 2-minute?
Hold on, Nick. I think I lost.
What are you using the 2-minute for is the question.
Hold on, I lost you there for a second. What was the question?
What are you using the 2-minute for?
Confirmation with the 15.
Are there rules on the 2-minute?
Confirmation on the 15 that the RSIs are matched, that the stochastics are matching up.
Stochastics are matching on what time frame?
To the 15 as well.
So are there any rules on the 2-minute chart, 2-minute indicators?
No.
So why even use the 2-minute?
So I'm not jumping in when there's a bull run if I'm looking for a short.
What constitutes a bull run on the 2-minute?
Well, I guess there would be rules then that the stochastics aren't buried on the 2-minute to oversold.
So that's a rule then. You cannot enter the trade if the stochastic is oversold on a 2-minute if it's a short. Is that correct?
Correct, yes.
So what happens when it comes, like here on the screen, what happens when it comes out of oversold and it starts to head up? Do you enter on that?
On a short? Yes, if it's rolled over, yeah.
So what happens on a 2-minute? I'm going to blow this up. On the 2-minute chart, what are the rules for entry on the stochastic?
So just right to the cursor where that rolled, I could enter right there.
It also rolled right here. Did you enter there?
No.
Okay, so why not?
Not enough of a roll.
It was time. What is enough of a roll? What are the rules on what is a roll?
Normally I wait for, what is it? Trying to remember what I used. I think it's a half a point tick. Separation between those signals.
You mean between the K and the D?
Correct, yeah.
So you need, in this case, for the blue K to go a half a tick below the D for that to be a rollover?
Yeah, so like say if I'm looking at it and the one's sitting at 80 and say the other one's at like 79.79, I'll wait until it gets to 79.5 and there's a half a percentage in between those two before I get in, because I've seen too many times where it might cross, but then within the next candle on the 2 minute, it reverts back.
Well, there is 0.65. There's more than half a percentage on this.
On that crossover, that first one?
Yep.
Okay. Then I may have entered that one. Yeah.
Okay. So you have rules then.
Correct.
Okay. So your rule is that what if it crosses over below the 50? Does it need to go above the 50 or can it cross over down here below the 50?
It can cross over below the 50, but if it's less than 30, that voids it out.
Why 30 and not 20?
I'm being conservative with it right now.
Okay.
Because I'm trying to protect capital.
Have you tested 30 and 20 to see which one works better?
I have not tested 20 yet. 30 is what I've activated now that's profitable.
Okay.
I haven't started squeezing it yet.
If it's profitable, then don't change it. Do you do 70 instead of 80 for longs?
Yes.
Okay, so you got the same rules. You got and the dip has to be 0.5% of a dip. Now, is that
because I would have to look
of a dip at
I
the
don't-
candle close or during candle?
Candle close.
Okay.
Because I only enter on candle close.
Okay, good. So you have rules. So this would be an entry here. We'll make this green and solid.
Yeah.
Okay, we'll actually make it red. This is short. And what about when? Okay, so it's got to be to the right of white and to the left of yellow. So you're on shorts. So this cross happened, but it's below 30, so you would not take it. So this cross is good, and this cross might be good. I'd have to measure it. We got 50, 89 to 40 sets, so that's good.
Yeah. So
Or no, they crossed together. Not good. That's good. That's above 30. Technically,
I would
it's
have to check
34.
that one because I'm only in one position at a time.
Okay, well, we're just testing, what worked. I mean, if
That one back there would have been fine if they're above 30 and they cross.
Yeah, all these are.
Yeah. Okay. Because there's a couple more in there.
There's some nuance there. Like when you do have a pyramid situation, the deeper into move you get, the more risky they are. So these second two trades shouldn't have as good of a result. It should always be the first one. So we'll just right now for back testing talk about the first one that happens, and we'll leave out the others. Like this technically is it's that. Would you take this one? It's a short. It's an overbought and it crosses over. Would you have taken this one?
I would have entered that one there.
Okay. No, we gotta wait until we have a white. Okay, no, this one here crossed over at 36. The next candle, though, yeah, it crossed at 36. I believe you are taking this one, not this one. You're probably taking this one here, like this, but that, and this one's probably not 97. What is this? 842. No, yeah, that's within the realm. This one here, you may not have taken it, even though it's a good trade. It's after you're already in trade probably. So this is we're doing some like just stuff here, right? We're not getting too precise. This one here, right off the bat, you're getting a trade, and this is real boring. No, it's below. It's right there. This trade, it's questionable, but you kind of want to take the edge cases, 31 to 59 and 33. Yeah, you want to take the edge cases because that's where the rubber meets the road, actually. All right, so you got to cross here, and probably this one here is below 30. Man, got to be what, left to right of yellow. So left to white, right of yellow. Okay, there we go. Right of white, left of yellow. What are we doing here? Right of white, left of yellow. Okay, so too low. Here's one, and this you might have taken. It might be a good trade, but we're just being conservative, right?
Yeah.
This one here, by the time it crosses, it's going to be that's right on time. And this last one, you might take it. It's an edge case. The edge cases are where we're going to define your algo, right?
Yep.
So all right, good. So what do we have? This is probably a winner. This one depends how you set your stop. Goes up a little bit. What are your rules on stops?
1.8 ATR at 20 candle close.
Okay, so short 1.8 ATR. So let's do ATR stop loss finder. I think that's it. Okay, so we'll make it 1.8 multiplier 1.8. Okay. So you're looking at a short here, stop loss up here. Okay. What's your target structure or what? 2 to 1?
2 to 1.
Okay. I mean, it seems like, okay, so remember how I told you like this second one would be probably a good trade, and there it is, right? It was a really good one. A lot of times these second ones, what happens is you get an actual trade, and then you get a liquidity grab, and then you get a second one, and the second one's where it actually is allowed to go down. That's mother effers playing with you. That's what that is. And then they don't care about you, but what it's about is they are just doing stop runs. So you just happen to be in the way. But in this case, you won because you have a generous stop loss. So your 1.8 is so far working out for you. This one here is probably gonna be a loser. Maybe no, this one's probably gonna be a winner. It just lasted through the cycle of stochastic flip, but you made it. You got a 2 right here. You got okay, that's a winner. That's gonna be a winner. This is going to be a winner. That's a winner. This might be a winner. This one's going to be tough because it's you don't have a lot of room for profit. You go up to your, then again, with the low volatility, you also don't have a wide stop. So your profit's going to be pretty quick. 2 to 1. Got to do 2. And that is a loser. Okay, so that one's not a winner. Thought so. That one's a winner though. That's it. So you have mostly winners. Good algo. What are your test results and what questions do you have?
Test results have been positive.
Okay.
Depending on the volatility.
Yeah, that one that lost, that was a low volatility problem.
Yeah, exactly.
Yep.
I would like to add a forward-looking algorithm or a forward-looking indicator.
You want an indicator or you want a filter?
I don't know which nomenclature accurate.
Well, they could be both. So you're trading really on these are quick trades. These are very quick trades. So what I would do is I take a look at that loser trade and which is right here, and let's paint that. And there's probably more losers. Like, okay, what I'm going to do, you have to do 50 times, right? So you got to find the ones that don't work out and see if there's a commonality, right? And then you can go to, you may not even need a different indicator. It could just be as simple as using what's on the screen, right? So was this the loser? Can't remember which one was the loser.
I think that one looks like the loser.
The one that I had just highlighted. I think you're right. I believe.
Yeah, that's the loser.
That's the loser. Okay. So what you could do is, and you got to do this a bunch of times with a bunch of losers, right? What we're doing right now is I'm showing you how it's done. It doesn't mean that what I'm going to do is correct because one sample is not good. And ideally, you actually have 200 loser samples, which is 1,000 trades. But at that point, if you're only, look, I'm going to put you this way. If you're winning 6 out of 10, what do you need a filter for? No, it's a question. If you're at 2 to 1 and you're winning 6 out of 10, what's the filter for?
Because I'm noticing the lag is having an effect.
Okay.
In real time.
So backtesting is not showing real results.
Close, but it's still not matching up to a statistical significance.
What's the difference? So the what we would call the disparity, the difference between testing and actual trading, that's called the disparity. What is what we would call the delta? What's the difference between the two?
It depends on what I'm looking at between forex and other markets, but it can be 30% on some, 20% on other. But I'm noticing consistently probably a 7 to 10% decrease on the profit factor.
That's not bad. Is it profit factor? Is that okay? So I think in terms of hit rate, and I think in terms of risk to reward, and I think in terms of expectancy.
So hit rate dropped 10 to 12%.
Well, that's significant. You're going from 60 to 50. But here's the thing: you're still 2 to 1.
Correct.
So if you're hitting 50% with a 2 to 1, you should be pretty profitable.
Correct. It's there.
Okay, so you have a profitable algo. You have a 50% hit rate. You have a 2 to 1 risk to reward ratio, right? So let's just say you're putting $100 in every trade. You're when you lose 100. When you win 200. So you win 2 in a row. Now you have 400. Then you lose 2 in a row. Now you still have $200, right?
Correct.
So that's how far are you back tested 200 times?
Yes.
And are you forward testing at this time?
Yes.
How many trades are you into the forward test?
I'd have to look at my journal, but off the top of my head, I think right around 35.
So you have 35 trades, and in the live trading, in the forward trading, you're sitting at a 50% hit rate with 2 to 1 risk to reward ratio, and you're not changing anything. You're just letting the losers lose.
Correct. Yes.
And you're letting the winners win. You're not trying to manage or do anything.
No, I'm not changing. I'm not taking stop loss to break even or anything like that. I set and forget.
Well, I'll tell you what I would do is I would test it all the way to 100 live, and I'd deploy.
Okay.
At full size. I wouldn't worry about filters or any of that. So just if you're test, okay. So for the audience, forward testing is when you take a very small amount of real money. Some people use demo. I don't like to do that. I think real money is better. Even though you have risking $1 or $10 at a time, it's real money. So you're going to get a psychological effect on it. Okay. And I think that's important. In my own experience, that's how it is. So what I would say to this is if those statistics continue to be where they are now, they could get better. They could get worse. But if you're profitable, then I would simply deploy after 100 trades.
Okay.
Now what you could do is now you've deployed, right? And you're just getting signals, right? And when you get signals, you can just take the trade and then you don't have to think about it. So what you're doing is now you're trading, and while those trades are running, you're now going back to test all your filters and your fancy stuff.
Yeah.
So the good news is that a forward test is going to act just like a deployment, isn't it?
Mm-hmm.
It's to you, it's the same thing. You're just taking smaller trades.
Correct.
So go ahead. In this particular case, if you have the time to forward test through to deployment, then it's like forward testing and deployment to you is going to be the exact same buttons that you click. It's going to be the exact same amount of time that you spend on the chart. So if that's the case, what I would do is, as I was forward testing, I would forward test this through to completion. And while doing so, go ahead and find a filter and test it out. But don't change this algo.
No.
This algo, keep it exactly how it is. No filters, no funky, no management, no nothing. Just live test this one as exactly how you have it through to completion of 100 trades. If it is profitable, deploy. And while you do all of that, you can go ahead and try to test with filters. So what I do, this is on the 2-minute chart. You're going to have to go back through the loser trades, and then you're going to have to figure out, like, you're going to have to mark the losers, which means it might be that you need to go through both your back test trades and your live test trades to find enough. Because for a proper sample size, what you need is 200. And look, if you're going to do fine, because if you truly, in fact, let's back this up. I would use your live test example. So I would actually live test. As you're live testing, study the loser trades that you have, right? And as you deploy, go ahead and study those loser trades that come after you've deployed. And don't create the filter until you have 200 loser trades. And you will, because you're winning like 50%. Just a lot of, that's half your trades are loser trades. You're going to have plenty of data. Yeah. So you can theorize. Like once you get to like 50 examples, then what you can do is, or even 25, you can start to play around with filter, right? Just like have a couple ideas, don't spend too much time on them, get the data, start the back test, whatever. Do all 25, set it aside, and then let more examples come through. And each example that comes through of a loser trade, test how your filter would have done on each of those. Once you get to 100 of live tested filter trade, ideally you would have 200, right? That's better. But because it's live data, you could be a little more discerning and you could just test how it would have gone live. Okay. So just because I have it in front of me right now, what would I do? Okay, those are, I'm looking at the losers. I'm not seeing anything significant on this chart per se. Winner chicken dinner. Yeah, see, that's a winner. Yeah, is this a winner here? Let's see, because I didn't really test all these, right? So this one here, okay, let's go short and we go down 2 to 1.
Yep, that's a winner.
The winner. Yeah, so we can't use it. I mean, it's always encouraging when you get a bunch of winners in the back test, but you start to understand after enough time, what that really means, or what it means and what it doesn't mean, right?
Exactly.
Is this a winner, this one?
No.
No, that's not a winner?
I don't think so.
I think you're right. That's a loser.
Yeah.
So obviously it's going to be for like whatever we look at this one, it's going to be the same reasons that we find, right? It's probably going to be the same type of setup as to what we're considering. Ideally, we find a loser in a different batch, which encouragingly does not exist, right? But this one's, I think, is a winner. But even so, it's the same batch. Ideally, you find the loser trades in different areas. You see what I mean?
Like, no, I think that last one was a loser.
Which one?
That red line right there?
Well, we don't have a trade here until right here. Yeah, so short. But I can tell you why it lost. Just right at the end of the day. It's got no volatility.
Oh, yeah. Okay.
So you just, you got no volatility here. You're just, I don't take trades after like an hour before the close. I shut it off. So that could be a form of a filter where you see like the volatility dies that late in the day and you just don't take trades, right?
Yeah.
So I would not use that example for that reason because we know why, right? But now that we have a little data, let's go ahead and see if we can find anything. Yeah, nothing there. This is a volatility issue as well. So it might be that ADX is your filter. Okay, let's take that. Oh, it's an ugly one.
Is ADX is forward looking or that's volatility?
Volatility.
Okay. That's what
it's not the best. It lags. I don't like using it, to be honest with you. Let's go with let's do this. Let's add at the same time frame. And we're going to add an MACD. We're going to put it on like the 5-minute MACD. We're going to make it time frame 5 minutes. Okay, so losers out. No, it was all within. It was it was ugly, but it was all within. Let's try the 10-minute or the 15. Let's just skip up a bit. No, it was all within. MACD is not going to be our friend here, I don't think. What if we take a look at SMI, the old trusty, and then I'm going to jump off here pretty soon. See, that's not helping us at all. Well, that's on this time frame. So let's switch time frame. Let's put it on the 15-minute chart. What it does? No, not helping. Try the 5-minute. No, not helping. Yeah, you're going to have to experiment with this. Like the time that it takes to find a filter is like hours.
Yeah.
So you're just going to have to like toy with it. I mean, I put it on the 3-hour. Yeah. No, you're going to have to figure out a filter, my friend, because we're out of time, and that takes a lot of time, and it takes a lot more data than we have. But it might be that you need to increase the time frame. You saw me increasing the time frame on the indicator, but you're going to have to like play with it, and that's fine. You are in a position with a live testing algo that is profitable, well within like the so far well within the ability to deploy. So as you're you're forward testing and deploying, take your time, get those loser trades, and the ones that you actually traded that lost, not the back test, and map those out and see if you can find a commonality in some way, shape, or form. It could be something you're not even looking at. It could be structure. In this case, it wasn't really structure, was it? It was below. Well, this was prior to like this line here was like old. This trade happened before that was the 4-hour high, right? So it might be that there is a structural component that we're not seeing because we, aren't like maybe we didn't map that out, but you're already using that, so it shouldn't matter, right? So, that's one thing we didn't have on some of these trades was the actual 4-hour structure data. Let's keep that in mind. We only just traded it without even considering local 4-hour structure for any of them, basically. So there is that component. It might be that those lost because of that structural issue. So, but you have homework to do, right?
Now, if I wanted to code it, could I use AI to help me with that? Or
for sure.
Okay.
Yeah, every time. No, I've been doing AI. I've been coding my algos with AI. I send it to my coder, and he's like, yeah, he says it's better than anything I could do.
Okay, because I've been having issues where it's just not putting signals exactly where I want it to.
Well, when you have an algo that you want to code, then let me know. Maybe we'll do a session like this, or maybe like a video session, just one of our one-on-ones, and I'll show you that process.
Whenever you're free.
Yeah, we'll set it up. This is whenever you're ready. You just, make sure you have an algo that works. Like, make sure it's profitable. And once you've ran this through and you're deploying, then I'll put it this way: right as you deploy, let me know, and we'll do a one-on-one, and I'll show you how the coding is done.
Okay, perfect.
Cool, man. All right, well then, that's awesome. Thank you for watching. Everybody, grab all that stuff. I will end the recording now, and then